All right, my friend, it's done going live right now. So I am here with the great Ron Petersen. And Ron, thank you so much for joining me. You're with Petersen and Associates, PC, what is it?
Petersen and Associates CPA, yeah.
CPA, and then you got the, I know there's some LLC stuff behind there for taxes. This guy knows a lot about making sure that you do your accounting and your taxes right. And you've actually been my accountant personally, well, for my business and my personal accounting now for, I think it's been 7 years. Is that right? 7 or 8 years?
I think so, yeah.
Yeah, so I appreciate, Ron, just from a personal note, before we get into a lot of the questions that people might be having on the accounting side of things, and I've got a whole list of them. You know, from a personal note, in working with you, Ron's been great to work with over the years. I've had questions pop up from my clients that I've been able to call and get answers to really quick. I've had questions on my own personal side that I've had to get answered really quick. And Ron's been a great asset and resource. And he's even, you know, I deal with your team quite often, has been super helpful. So thank you, Ron, because you've been great to work with.
I appreciate that.
Yeah. All right. So without further ado, COVID-19 is kind of rocking the world, you know, in every business and every household, really. And there's a lot of questions popping up. And I wanted to make sure I got an expert on that we could ask some of these questions to. So if you're out there and you're watching this and you have a specific question, feel free to ask it. We'll go ahead and answer that to the best of our ability. This is streaming on Facebook Live. This might be on YouTube as well if you're watching it later. So obviously you can put your questions in the comments and we'll get you the information to reach Ron and his team at a later date if you guys are interested in that. So without further ado, let's kind of jump right into the questions that are at hand. So one of the first ones is around the stimulus money and in particular unemployment. So well, before we get to the unemployment side, let's ask the stimulus money. What was it, and should you have received it already, and what can you tell us about that?
Yeah, so there's a lot of moving parts to this new legislation that's been passed. The original stimulus payment that was talked about was $1,200 per person, $2,400 for married filing joint, and then $500 per dependent. If you fall within the required adjusted gross income ranges. So for married filing joint, you can have adjusted gross income of up to $150,000 and still get the full stimulus payment of $2,400. For head of household, the top end is $112,500, and then for everybody else it's $75,000. So married filing separate or single, as long as you make under those amounts, you can get the full stimulus payments. There is a phase-out range where you can get a reduced payment. For married filing joint, that's from $150,000 to $198,000. Your stimulus payment is reduced by $5 for every $100 that you're over the income cap. Let's see, for head of household, it completely phases out by $136,500 in adjusted gross income, and then for single and married filing separate, it phases out at $99,000.
Great. So should they have all received that money by now?
Yeah, that's a good question. I would say that I wouldn't expect that everybody has received it by now. I know that there's been a lot of issues with receiving complete payments and receiving payments at all. And one thing to keep in mind is this whole thing was thrown together very quickly out of necessity. And there were certainly some issues out there that weren't foreseen. So probably the biggest issues that I'm getting calls from clients on is why does if I go out to the IRS website, because you can go to their website and click on a link that says, where's my payment? And that will tell you what the status of your stimulus payment is. I get several clients that have called saying, well, it's telling me something to the effect of you know, your payment can't be processed, or something to that effect. And essentially what that means is they either don't have direct deposit information, or you're not eligible for the payment. Um, the other problems that are coming up is, if in the prior year you had direct deposit information, if you had direct deposit information on your 2018 tax return, you haven't filed 2019 yet. The IRS is going to look to that direct deposit information on your 2018 tax return. If that account has been closed, then the IRS will try to deposit your payment to that account. And if it's closed, the bank will bounce the transaction back to the IRS. And then you're going to receive a paper check instead. Paper checks, they haven't even started issuing them yet. They don't start issuing them until next week, I think. And so that could delay your payment by several weeks.
Wow.
Yeah. If you used something like a refund anticipation loan or refund anticipation check, which is, these are products that are commonly used by some of the big box tax preparation stores, as well as like TurboTax, where you can get your refund early, but it's deposited into a temporary account with the preparer or with that office, and then they issue you a check. And so what's been found is that payments are being sent to those temporary accounts, and so that's delaying payment as well, because again, that would have to be bounced back to the IRS, then they'd send a paper check. So there's a lot of things that are causing some problems. I've also heard from clients that they've received their stimulus check for themselves and their spouse, but they didn't get an amount for their dependents, and there should be $500 per dependent as well in that stimulus check. And there's really not a way that you can contact the IRS to tell them that you were underpaid on your stimulus. The IRS has said that they're going to be sending out notices to people who did receive their stimulus check about 2 weeks after they receive it, providing a number that they can call if the amount wasn't correct. Of course, we haven't seen those notices yet, so I don't know exactly what that looks like, but there's supposed to be some kind of way to fix that. Now, ultimately, the important thing to understand is the stimulus is a prepayment of a 2020 tax credit, a rebate on your 2020 tax return. And so if for some reason you don't get it, or you don't get the correct amount during this time that the stimulus payments are being made, then you'll be able to get it when you file your 2020 tax return. Now that could be cold comfort for some people that are in a situation where they're really waiting for that money. But the fact is that if you don't get it now, you'll get it a year from now.
Gotcha. So what I'm hearing is, if they have questions on where it's at, go to the IRS's website and look at where's my check. And then obviously you answered a lot of reasons why they might not have it.
Yeah. And unfortunately, the IRS phone lines are shut down currently. As a practitioner, we have a special kind of hotline that we can call the IRS on, called the Practitioner Priority Line, and I can't even get a hold of the IRS through that. So they're
not even answering the bat phone right now, huh?
They're not. In fact, the message is we are not answering calls right now.
Gotcha. Well, I can tell you from just an individual standpoint, they never answered my calls, so nothing's changed for me. Okay, so let's go on to the next one here. We have someone that we know who their husband became unemployed and went on unemployment, and then they're wondering on, where's the $600 federal government unemployment? There was supposed to be an additional $600. Where is that, and do they need to do anything extra to receive that?
Yeah, so this is another one of those things where it really has been impacted by the speed in which the program was rolled out. At this point, all of the states, save for 4, are issuing the $600 additional unemployment checks. Unfortunately, Idaho is one of those states that hasn't started issuing those yet. And it's because of a system incompatibility between the federal unemployment and our state unemployment payment system having specifically to do with this additional payment of $600. The state is working on that, and as of their last notice, they should be issuing those checks next week, or by the end of April at any rate. So they're
okay.
on the
And are they backlogging them, or how is that working out?
So yeah, they should be backdated to when unemployment was first received. So I don't really know at this point whether you're going to receive your first check that makes up for that arrearage, or if you're just going to receive checks for a longer period of time to make up for their arrearage. We don't know right now.
Gotcha. Okay. I did get a question. I don't know if this is rhetorical. How do rich people get a stimulus check? I don't think that's coming down the pipe that I'm aware of. So anything else on the federal government $600 additional unemployment we need to know at all? Or is it just kind of wait?
From what I understand, there's really nothing additional that you need to do to qualify for it. Like I say, as soon as the state system is fixed where they can process those transactions, then they should start flowing out.
Gotcha. Okay. And so now we move on to maybe some different programs that have came out. There's been a lot of talk about the payment protection program. I work with a lot of 1099 contractors in the real estate industry, whether it's a small business doing, repairs, or, a landscaper, or a plumber, or whatever. We work with a lot of people that we're coming in contact with, and they have questions. So first, I guess, address the payment protection program. I understand that they ran out of funding, and there's a bill they're signing today, it sounds like, to maybe or put additional funding into that. What can you tell us about that?
Yeah, so the initial round is $350 billion for the funding. And the first day that a business could apply for it was, gosh, I think like April 6th. And then that was for businesses that did not include sole proprietorships, which are the 1099 contractors that you're talking about. And then the folks that were sole proprietors receiving 1099s, they could apply on the 10th. That ran out pretty quickly within gosh, 10 days, 2 weeks, something like that. There has been a second round of funding that's been approved today. That's an additional $484 billion. And that should start being available to applicants by the first of next week, from what I understand. What the PPP is an additional effort by the federal government to get money into employees' hands for those employees that are not hitting the unemployment rolls. So essentially what it is a business can apply for a loan equal to 2.5 times of their average payroll, their average gross payroll. And as long as they use at least 75% of the proceeds of that loan to pay payroll costs over the 8 weeks subsequent to when they receive the funds, there's the potential that all of that loan will be turned into a grant. But it's important that 75% benchmark is hit. So that's why
so it's a balance between like them trying to, doing their best to thwart even more unemployment by saying, hey, keep these people employed, we'll use these monies to do so. And if you do, we'll forgive it. So what I'm hearing is, if you're a business out there and you're considering laying people off, you need to look into the payment protection program and see if it's a fit for you. Is that right?
Right.
Okay. Awesome. And it sounds like they're really close to getting additional funding on that shortly. So what about the 1099 side? Is that the same thing? I mean, where did they go to apply for that?
It's the same thing. And this is an important point too. These PPP loans are only being approved through financial institutions. So you've got to go to your bank or your credit union. Now, ostensibly, whoever you apply with is supposed to have a known relationship with you in order to expedite the process. There are some banks out there that are willing to establish new accounts and process the applications. But yeah, people need to go to a bank or a credit union to get that application put through.
Okay, gotcha. And I just personally, I network with a lot of businesses. I've heard, just going to put my 2 cents in, I've heard that the bigger banks have not been coming through on that stuff nearly as consistently as some of the smaller ones. So for whatever that's worth.
Anecdotally, I have experienced the same feedback from clients who have actually gotten the funding. So yeah, I would agree
gotcha.
with that, at least in my experience.
Yeah. So, okay. Well, moving on to the next one then. I appreciate it. This is great information, Ron. So, due to COVID-19, the tax filing deadlines were extended. What changed there?
Okay, so there's a couple of things to be aware of here. The filing deadline. So the initial filing deadline that was April 15th for the federal return, your 1040, that got pushed back to July 15th. Now, additionally, if you're a taxpayer that pays quarterly estimated payments, the due date for your first quarter estimated payment, which was typically April 15th as well, that's been pushed back to July 15th. Now, importantly, the second quarterly payment, which has a due date of June 15th, that due date has not changed. So it's important for people to understand that, because if you make that second quarterly payment late, then there's going to be some underpayment penalty and interest that could accrue on that. The other important thing is that for the state of Idaho, that filing deadline has been pushed back to June 15th, not July 15th. So if you owe money to the state, you want to make sure that you get that state tax return filed by June 15th. Now, I've had a lot of clients asking, why is it that Idaho didn't conform with the IRS? And it really comes down to a question of our state constitution and having a balanced budget and this kind of thing that really prevents our legislators from pushing that due date to July 15th. So just keep in mind, state due date is June 15th, federal due date is July 15th.
Gotcha. All right. So next, how long, this is a question we get in real estate. So bringing some real estate into this, how long do you need to live in your home in order to sell it without paying any sort of taxes in terms of on the gain? So if someone bought a home a year ago or 2 years ago or 5 years ago, let's talk about that side of the real estate game.
Okay, yeah, this question comes up a lot. The rule is that if you've used a home as your primary residence for 2 years out of the last 5, they don't have to be consecutive, but it does need to be used as your primary residence for 2 out of the last 5 years, then you get an exclusion from long-term capital gain equal to $250,000 for single filers and $500,000 for married filing joint.
And I think it's important to note that it's a gain, right? It's not the sales price; it's whatever your gain is.
Correct.
So, what are some things that I've heard that there might be some things that you could include into your cost basis. So, if you bought a home for $300,000 and then you improved it by $50,000, is your basis now $350 as long as you track that?
That's correct. Yeah.
Gotcha.
Additionally, the expenses from the sale of the home, the closing costs, realtor fees, things of that nature, those are going to add to your basis as well.
Okay, that's great info. So 2 of the last 5 years now, does that mean I could technically have 2 primary residences and avoid capital gains on 2 at the same time effectively, right?
No, not at the same time. You're allowed this exclusion every 2 years.
Okay, gotcha. So if you just continued to, so you could kind of game it a little bit. If you bought a home today and lived in it for 2 years, and then bought another one and didn't sell this one and maybe rented it out for 3, right? Like you could, talk to your CPA is what I'm hearing.
I've had clients do that very thing where they as long as they, they'll have a house that they'll season for 2 years and then another rental property or some kind of investment property, and then they'll sell their primary residence and move into the investment property and season it for 2 years and then and then sell that. You know, it's kind of a long-term plan, but
Sure.
it's something you can do.
Well, and you know what? It begs the question for me, I guess more on the technical side. Now, I know you already get this, but I have clients all the time who come to me and they're like, hey, we want to keep this home as a rental. And, you know, one of the first things I talk about, two things I talk about. One is like, are you sure? Because let's just say they own it outright or whatever. It's kind of irrelevant whether they own it outright or they have a lot of equity. What are the odds that of all the properties out there, this makes the most sense for you as a rental property? So that's the first question. And usually we can find one that will get them a better return for the same amount of money. Let's say they have $100,000 in equity in it and it's going to net them cash flow of $500 a month. Could we take that same 100 grand and maybe net them 600 or 1,000 or whatever, right? So that's the game we play to start with. But here's the game, the tax game, which I know, Ron, you know this all too well. If you make it a rental today for 3 years and 1 day, now you're risking the capital gains, right? Whereas if you would have just sold it right out of the gate, you wouldn't have had to pay any gain on that.
Yeah,
is that correct?
You've got 3 years from the time it stops being your primary residence to sell it and get the exclusion.
Yeah. So I think people need to be aware of that when they're, you know, because that's what ends up happening. They buy a starter home, you know, they're getting more income or different jobs and whatever, and they're growing their family, and then they can afford that home and maybe even afford to buy another one. So they go buy another one and want to keep it as a rental. And, you know, luckily the market's been going up really well for the last 6, 7, 8 years. So they have a lot of equity. And, you know, it's just keep in mind you can avoid gain on that because it was your primary residence. Whereas if you make it a rental for 3 years and 1 day, like Ron is saying, now you're going to have to pay capital gains on it when you do sell it. So it might be some strategy around that. Anything else on the capital gains side that we need to ask?
You know,
I think you hit it.
The only other thing I can think of in particular with homes is there are some exceptions to that 2-year rule, but it's really kind of a case by case basis. If there's some kind of medical necessity to move out of a house, like I've had clients that had back problems with multiple level houses, and so they couldn't make their way up the stairs anymore, and so they had to sell before the 2 years, and that was allowed. So it's really kind of a case by case. If you think that there may be a good reason why you're selling your home early, then it's worthwhile to talk to a CPA.
Yeah. And if that's my standard answer when someone's like, hey, do we owe capital gains? And I tell them the rules that I know and to talk to a CPA. And if they don't know one, obviously talk to Ron. Okay, so let's go into another question. You already answered the IRS availability thing. So what if you owe back taxes or have a monthly installment agreement in place? First, tell us what that is. And then for those of the people that might be affecting, what does that mean right now?
Okay, so this is an important thing, and this is part of the coronavirus response through this tax legislation. If you owe back taxes, if you're an audit, if you are on a current IRS installment agreement, which is a payment plan that you can set up to pay your back taxes, those are all affected by this tax legislation. If you're on an installment agreement, that installment agreement can be suspended. I forget the exact date now. I think it might be through the end of July. However, the important caveat about that is if you're making payments on that installment agreement by check, where you're mailing a check into the IRS every month, then you can stop making those payments for a few months. However, if you're set up for a direct debit from your bank, the IRS can't stop. They won't stop collecting. They tell you to talk to your bank and have your bank cancel that arrangement. But a lot of the banks are unwilling to do that. So if you're making installment agreement payments and they're a direct debit through your bank account, you're going to need to talk with your bank and see if you can get that suspended for a few months, if that's the case. Audits are being suspended for the time being, with the exception of if your audit results in a refund, they're not going to hold up that refund. Um, and then what was the other item that we were talking about?
So we have monthly installments or back taxes.
Oh, back taxes. Yeah. If you owe back taxes, if you haven't filed a tax return, you've got a tax return or multiple returns out there that you haven't filed. Now is the time to file them, because there's no interest accruing in this time period with the IRS. So if you owe back taxes, if you've got tax returns that you haven't filed, now is the time to get those filed so that you can sidestep some of the interest and penalty that results from having not filed those tax returns.
Gotcha. So now's the time, huh? I like that. Okay, so diving into some of these other questions, let's see. Will stimulus money be used to pay past tax debt?
Okay, yeah, this is a good question. Your stimulus checks are specifically not going to be grabbed by the IRS to pay past tax debt or back taxes. However, if you owe child support payments and you're behind on them, the IRS will grab that stimulus money to satisfy child support payments. The one other thing to note is that if you're in arrears or past due on a loan from your bank, or if you're overdrawn on your account, your bank can take that stimulus money. So it's not protected from everything in all occasions.
Oops, gotcha. So that's good news for people who are owed child support. They might be getting a double stimulus, right?
That's right.
All right. So I've got a question from one of our people in the audience here. So they're kind of curious, like, where do you see the tax rate going? And I know you can't hold you to anything, but do you have any idea on where you see the tax rate going next year or the year after that?
The crystal ball thing is kind of tough, and especially when it comes to a timeline. I can say this with relative confidence. Cash flow for the federal government is going to need to increase to be able to pay this additional debt that we've incurred for this coronavirus thing. And we're at historically low tax rates right now. Without even getting into the politics of it or anything, I just anticipate that tax rates will go up. When? I don't know. Will it be in the next year or two? It's really hard to tell. Will it be in the next 5 or 6 years, 4 years? I don't know, but I would anticipate within the next 4 or 5 years, they're probably going to go up.
So, and why would people even ask that question? Because some people might be watching this and being like, who cares, deal with what you deal with. What's significance of that?
Well, a few things. If you're doing some retirement planning, one of the big things that we do with planning on our clients is if they've got big required minimum distributions hanging out there on individual retirement accounts. So right now, well, actually, that's another point to talk about, but traditionally, once you reach age 70 and a half, you have to start taking distributions from retirement accounts. You can't just leave it in there, with the exception of Roth accounts. They don't go by the same rules. Part of the coronavirus tax legislation is that's been pushed out to age 72 for now. And also, if you haven't taken your required minimum distributions yet in 2020, you don't have to take those because of the slip in the stock market. The IRS has said, we're not going to force you to take those payments out and lose value in your retirement accounts. But as a normal course of events, without the coronavirus, what we typically look at is we say, okay, if you've got these required minimum distributions that you're going to need to take once you hit 70 and a half, how far down the road is that? Do we anticipate that tax rates are going to be higher when you're forced to take those distributions? If that's the case, then we may talk about making what's called a Roth conversion now where you take some of that traditional IRA money or 401k money or whatever, and you convert it to a Roth account. You're going to have to pay tax on it when you make that conversion. But what we're trying to accomplish is kind of saving tax in the margin there where, yeah, we're going to pay tax on it today, but that's going to be less than the taxes we're going to pay on it when we're forced to take it out of the account.
Yeah, unfortunately, they always get their taxes, right? So you're going to pay them at some point. And
Yeah.
I think what you're saying is if you think they're going to be lower today, and no one knows for sure, versus what they're going to be tomorrow or the next year or whatever, you're saying it might be prudent to do that. I think some of the other things too for business owners, I know you see this often in your world where they may have the ability to not pay as much taxes this year. And they do that through, maybe investments in their business to avoid taxes. And so I guess if we're reading between the lines here, maybe they do want to take a tax burden this year versus in the future, possibly, right?
Yeah, that really comes into another planning point when it comes to depreciation, because we've got options of taking depreciation up front for business assets that are purchased. We can expense that in the year of purchase, or we can depreciate it over, depending on the class of the asset, 5, 7, 20 years, whatever it is. So yeah, that's always a planning point.
Awesome. So let's see. What does it mean if my status for the stimulant payment on the IRS website says payment status not available? I think you already answered that, right?
Right. That is going to mean that either the IRS does not have direct deposit information for you, or you're not eligible for the stimulus, or there hasn't been a tax return filed in 2018 or 2019. That status will change as the IRS gets that information updated. Once they start issuing paper checks, then your status will change if a paper check has been sent out to you. If you're a Social Security recipient and you don't file a tax return, you should still get that stimulus payment, and they'll use the direct deposit information from your Social Security payments to make that. So it's kind of a stay tuned thing. Unfortunately, you can't get a hold of anybody at the IRS to get any more specific information.
Yeah, which we went over earlier. So I did get a question asking on I think it's the CARE Act. They said, which of the coronavirus plans are loans and which are forgiven? So of the CARE Act, like which ones are loans, which ones are forgiven? I know there's grants. There was like a $10,000.
Yeah.
You know.
So yeah, there is another program. It's called the EIDL, which is the Economic Injury Disaster Loan. There is a emergency payment for the EIDL up to $10,000, calculated at $1,000 per employee. This is a prepayment on a loan, which will not be required to be paid back. So it's effectively a grant. I've got lots of clients who have applied for that. I don't have any firsthand knowledge of anybody getting money on it, but I know that through some folks in the industry that I've talked with, and some other folks on online who are keeping abreast of this, they have seen some of those payments being made. I just don't have any firsthand knowledge of it, but it's still something that people should apply for, I think. The EIDL prepayment is applied for through the SBA website, not through your banking institution. So you go to the SBA website, they have a link for the Economic Injury Disaster Loan, and you can go there, and it's a relatively quick process. Might take you 5 or 10 minutes to apply for it, and they give you a confirmation number and essentially say, you'll be contacted when and if you get this money.
Awesome. And I'm sure you might have seen in the news, maybe not because I know you're buried in work, but a lot of the payment protection program, some of the bigger businesses had taken money and now they're getting heat and giving it back. Yeah. Did you see that by chance?
I did. Yeah. there's some loopholes in it that have been worked by publicly traded companies and companies that are franchises, but maybe not listed on the SBA's franchise list. And so they're succumbing to pressure to pay that money back.
Yeah, I saw 5 or 6 of them giving upwards of, the max back, which was $10 million. I think that the interesting thing is this, when you look at this payment protection program and the businesses that might be applying and taking it, the thing to look at is, do they need the money? Maybe not. But here's the tricky part, though, too, is they might need the money not to lay people off. So they might not need it, but they might just have planned on cutting all their employees, either furloughing or getting rid of them. And that's a really interesting thing. Obviously, the public opinion seemed to be hammering that, but I thought that was kind of interesting. Like, how many people are they going to lay off now that they're not getting the $10 million, even though they are a publicly traded company? And maybe they don't need it at all, but it's just a matter of I think there's the public view and then like the inner workings behind that people might not see.
Right.
So it's just fascinating to me how they might end up using that money. So we did have another question. Are you aware of any popular changes in deductions or credits? Is there anything new that people can claim or anything like that people should be aware of?
Yeah, so probably one of the more important ones that you can take advantage of on your 2020 tax return is even if you don't itemize, you're still able to take a charitable contribution deduction for up to $300 in 2020. That's a pretty big change. So that's one to be aware of. Make sure that you give your tax preparer all of your charitable contribution numbers so that they can get that calculated for you on your 2020 return. Because I know that a lot of people, since the standard deduction went up to 24,000 plus, even if they do make those charitable contributions, they may not be giving them to their tax preparer because they know that they're not going to be able to itemize anyway. But people just need to be aware that in 2020, make sure and give that to your tax preparer, because there's still some benefit that you can get from it. I don't have audio for you, Chase.
There you go.
There we go.
Sorry, we're kind of winding down here. We went through a lot of information really fast. I'm going to give a shout out. Thank you guys for your questions. If you have more, we'll take them as we kind of wrap up here. Ron, I know this is your busy season. Usually you'd be on vacation right now. Is that right? April 15th over?
I'd be hanging out with palm trees and water right now, usually, yeah.
Yeah. Well, none of us got vacation due to the coronavirus. You can't really travel anyway.
Right.
So
yeah, that's true.
So it works out. But if anyone else has any last minute questions, hit us up. We'd be happy to answer those. I guess in wrapping up here, is there anything else that we should be aware of, like that we haven't gone over, or maybe we haven't discussed here in this meeting today, whether it's something that you think might be coming down the pipe, or something you're dealing with and you're surprised that people don't know, and to you it's just like second nature, but anything like that comes to mind?
Not that we haven't covered. Just to reiterate a few things, keep in mind the difference between the extended due dates between the state and IRS, because I imagine that's going to hang some people up, because with the state, if you end up missing that deadline and you owe money, there could be failure to file penalty that comes along with it. So make sure and get that. The extended due date is still the same, of October 15th. So if July 15th still is going to be too soon, and you need more money, or you need more time, because probably you need more money, then make sure you file an extension that'll take that out to October 15th.
Gotcha. Yeah, I think that is something that you're probably right. People are going to get hung up on it. And you know what? A lot of people have already filed their taxes, obviously eagerly awaiting to get their return early on, right? So you know, most of what we're talking about is people that are cutting checks, I'm guessing.
Right.
So that's really important. And I'm assuming that penalty is not, it's not cheap, I'm guessing. So
It's based on how much you owe. So it's a percentage of your tax liability.
yeah. So June 15th for Idaho, July 15th for federal. And if you do extend, it's October 15th. Is that for both state and federal?
It is. Idaho gives you an automatic extension to October 15th as long as you've paid in a percentage of what you owed for the current year or what you had owed on your prior year tax return. So if you feel like you have to extend, make sure and get with your tax preparer to ensure that you've got enough money paid into the state that you're not going to get hit with that failure to file penalty.
Gotcha. So I just thought of a question that always often comes up for those that are 1099 contractors and maybe looking to have some sort of retirement plan. I know that's not necessarily your bag alone. You know, usually you're dealing with a financial advisor, but is there any advice you'd give to those people? Maybe they own their own business right now and they're wanting to avoid paying taxes on all of their money, maybe by having a retirement plan or something. When should they start thinking about that? What time of the year should they start thinking about that?
January 1st. I mean, think about it early and often. The one conversation that I have with clients is self-employed clients is, look, nobody's there to make sure that your retirement is provided for, except for you in a very literal way when you're self-employed. So you need to make sure that you're getting money put into retirement for yourself. Get with your tax preparer, get with a financial advisor. If you don't have a financial advisor, your tax preparer can usually refer you to one. It's nice if the two of them work together, especially at the end of the year, to determine what kind of strategies you might employ to reduce tax burden for the current year and the next year. There's a lot of different retirement plans with different contribution limits and different advantages and disadvantages to them. So, like I say, it's just important that you get together with your tax preparer and a financial advisor to figure out which program is going to work the best for you. But it is super important to think about when you're self-employed, because if you don't do anything and have any kind of a retirement plan, then you're going to retire, and the only guaranteed income you're going to have is Social Security, and you know that was never intended to be the retirement income. So,
and who knows if that's, well, anyways,
yeah.
Hopefully that's around when you're ready for it. So let me give a question for realtors, because I coach a lot of realtors. I end up hiring a lot of realtors, and I teach a lot of classes to realtors. And I know that there becomes a point when you're self-employed when it might make sense to create maybe an S corp. You know, I know you'd want to meet with that person. You wouldn't want them to watch this and just go and do an S corp and without getting advice. So I know that, but could you give us some generic rules, like why would I want to become an S corp, and at what point would it make sense to become an S corp, and how does my world change when I do that?
Yeah. So entity choice is always super critical and always takes some planning too. There's a couple of rules of thumb that I use when I start having the conversation about possibly either making an S corp election in an existing LLC, or creating an LLC, or creating an actual S corporation. They're all kind of different filings. And that is net income in excess of $50,000 or $60,000 a year. That's when I start having that conversation, because the one thing about a Chapter S corporation is that instead of just being a business owner, the business owner now becomes a shareholder employee that has to receive W-2 wages. Those W-2 wages have to be reasonable. And so there's some research and discussion that goes into that. But essentially what you can do is compensate yourself reasonably in the industry that you're in without all of your income being self-employment income. Because keep in mind that self-employment income is subject to Social Security and Medicare tax, and you may be overcompensating yourself based on whether you would pay somebody that much to come in and do your job for you in your business. And so there's some tax savings on the self-employment tax side of things there.
So can we just talk math on that for a second? Let's say I was a real estate professional or any 1099 contractor for that matter. Maybe I'm a handyman or a construction worker or whatever. It doesn't matter. And I made $100,000 a year. That was my income. And I just did it as self-employed versus maybe paying myself a $40,000 a year salary and then having the remaining 60 as the S corp. Like, how does that help me? I mean, are you able to do that pretty quick math?
Yeah, let's just take those numbers as an example. Let's say that we've got a business owner that's bringing in $100,000 in net income, but because of the services that he provides, the reasonable W-2 compensation for him would be $40,000. Without being an S corporation, he's going to pay self-employment tax on that entire $100,000 in addition to income tax. Self-employment tax, that's your Social Security and Medicare, that's equal to 15.3%. So you're paying 15.3% on that $100,000, or a little over $15,000, in addition to the income tax that you're going to pay. Self-employment tax, the net income that's calculated off of is not reduced by itemized deductions. It's not reduced by retirement contributions. It's not reduced by tax credits generally. So you just take the net income from your business, and that's what you're going to pay self-employment tax on. Now, if that same person, we decide that we're going to either, if he's an LLC, we're going to make an election to be treated as an S corporation, or we say, okay, maybe you just need to start a business that's, Personal Services Inc., whatever it is, and be treated as a corporation right out of the gate. What we'll do is we can set up W-2 wages for him at $40,000. He's still going to recognize that $40,000 in income as W-2 wages. He's still going to recognize the additional $60,000 as income from the business. So we're still talking about $100,000 in income, but he's only paying Social Security and Medicare tax through payroll taxes on his W-2 wages. So that puts us at $60,000 worth of compensation we're not paying Social Security and Medicare tax on, and that's over $9,000 in tax savings right there. So it can be a pretty worthwhile strategy, and it's something that if you feel like you may be in the position to have that conversation, you really need to get together with a CPA to figure out if that's the strategy for you.
Yeah, with you is what you're saying, right? Yeah, of course. No, I think that's a really great. I get that question all the time, and from newer real estate agents, I get it from. I mean, we work with a lot of vendor partners and most of them are business owners, and they're just 1099. I mean, they just bill and they don't have the S corporation set up yet, and I think that's really important. It does add a little bit more in terms of the administrative side they're going to have to take care of, but would you do a little bit more admin to save $9,000? I think most people will. Yeah. So that's great. So you brought up LLC, and it just clicked in my mind. LLCs, limited liability companies, is it right? Okay. So limited liability companies, I see people purchasing real estate and then putting the real estate into this limited liability company. Now, I've talked to you about LLCs before. Would you just share with us, like, what does that do? What is it doing when someone does that? Is it really protecting them? Is there a better way? Tell us your thoughts on that.
Yeah, so the two key words is limited liability in the whole LLC phrase. If it's organized correctly and operated correctly, you can mitigate your liability exposure. What we like to say in the accounting industry is that what an LLC will do, if you've got it set up correctly, is if somebody sues your business, it's going to stop them at the front door instead of your back door. So they'll have access to the assets within the business, but they won't have access to your personal assets. So with real estate in particular, investment properties, rental properties in particular, it's always a good idea to put those in an LLC. Now, an LLC doesn't mean that you have to file a separate tax return or anything like that. It still goes on the rental schedule in your personal tax return, like a rental property with it that isn't in an LLC would. However, as long as deed is transferred into that LLC, then if one of your tenants gets injured and you've operated that LLC correctly and you've got it set up and everything correctly, then if they sue you, again, they'll have access to the assets inside the LLC, but not your personal assets. And if you've got multiple LLCs set up for multiple properties, they won't have access to those other properties.
So you could have an LLC that is property 1 LLC, property 2 LLC, property 3 LLC. Are you saying that further limits the liability? So if one of your tenants falls, they can't come after all the rentals, right?
Correct.
Okay. Gotcha. So that's really, really interesting. I think that's some information that people should definitely consider. And obviously they should look at their portfolio and talk to you about what the direction they should go. So they're getting actual advice based on their specific situation, not just something they heard. So we are recommending you talk to Ron. This was not your talk. You need to call him or call me and I can get you set up with him. But yeah, I think that's awesome. So let's talk real quick to the best of your ability about the trust side of things. And again, I know that's not necessarily what you do, but you know the implications on the trust. Why would someone use a trust and what does that mean?
So a trust typically is used to avoid probate for probatable assets. So real estate is a good example of that. Real estate can be put into a trust. Now you get into all kinds of different trusts. The general terminology that we work with is whether it's revocable or irrevocable. Now there's a whole bunch of, there's probably 31 flavors of trusts out there, but essentially they're going to come down to whether they're revocable or irrevocable. Either way, a trust can sidestep probate, and that's where the big strategy comes in for those, especially.
And just for those that don't know, because I know you deal with this stuff every day, and I do too on the probate side of things. Probate is what happens when someone passes away, and whether there is a will or is not a will, there is always a probate unless there's a trust. And probate is where the judge gets involved and makes sure that all the debts are getting paid off that need to get paid off, and the assets are being moved where they need to move. Anything you'd add to that? Is that pretty much the gist of it?
Yeah, during that process, there's a personal representative that gets assigned to the estate, and the court makes sure that the will is being adhered to and all that kind of stuff. And with a trust, there's a trustee that's assigned to the trust out of the gate. It's part of the trust document that creates it. And none of the assets inside the trust go through probate at all. So it's a supplemental to a will, especially for those kinds of assets.
Yeah, so where I see that in real life actually making an impact is, the burden of that real estate while you're going through probate. That probate, depending on who's getting involved and all that can come along with that, it could be months. And whereas, and let's just do a real scenario. Someone passes and they have their home in probate versus someone who passes and has their home in a trust. The trustee can sell that home the day they pass or the next day or whenever it makes sense for them. They can sell it and get rid of it instead of having to maintain this home for months and months and months, lawn care and utilities and all that stuff. Homes, we don't realize this because when we live in them, we're constantly maintaining them. And, you get a home sitting still for 6 months with no one in or out of it. I mean, there's stuff can go wrong. And while you're in probate, you can obviously access it and do things with it, but you're having to carry the cost for that. And in some situations, you might need access to those funds right away, and you don't have it. So I think a trust would be a really, really good tool for a lot of people who are planning on passing on one of their greatest assets to their family members.
Yeah, and one thing that usually prevents people from setting up a trust is the cost of setting up a trust. And as a real general kind of statement, typically the cost of setting up a trust is about the same cost as going through probate. And so you either pay for it now or you pay for it later. And what I tell people is, look, when you've passed away and your heirs or beneficiaries are left to deal with, cleaning things up, you want to leave them with as few problems as possible. So if you put those assets in a trust, it's going to go really smoothly. It's not going to be drawn out. About the same amount of money is going to be paid to an attorney either way. So you might as well get it set up so that in your passing, your kids or whoever just don't have this long drawn out process they have to deal with.
No, that's awesome. I appreciate all this. Well, this has been great, Ron. I think you've answered a lot of the questions I personally had in dealing with, the real estate side of things. Obviously, your insight was super helpful on COVID-19 and the CARES Act and PPP and the additional unemployment from the feds. Anything else that maybe we hadn't discussed at all that you can think of, or anything else, any parting words you want to give people out there who might have been watching this?
No, I don't think so. I think I've made the points that I wanted to make. Hey, and I appreciate you giving me the opportunity to do this with you. And it's been great having you as a client, and I always appreciate your referrals. And I try to get people over to you as well. So you're really good at what you're doing.
Well, hey, thank you for saying that. And honestly, I can't thank you enough. My goal is to provide value to our clients, and bringing someone on like you, taking an hour out of your extremely busy day, because the tax lines were extended, which means you didn't get until October to do taxes. Now you got until June or July.
Right.
So I know you're really busy, and I know it's not easy for you to step away. So I really appreciate it. I'm sure my clients and customers and friends out there do as well. And thank you so much. We'll go back and watch this again when these questions pop up, so we don't bug you as much. So.
Okay. Thanks again. Take care.
All right. Hey, thank you. I really appreciate it. And let's see if I can stop going live here. One of these sections here.